Well, the purpose of the Where to Invest in Africa report is really to provide investors with an opportunity to unpack and peel back at the various layers of the investment potential that exists on the African continent. Running for more than 9 years now, there have been interesting trends that have been revealed. Ladies, I think there's quite a lot of information that we certainly need to unpack, but let's start off with the overview of exactly how it is the RMB Global Markets team manages to compile this report, and of course key insight that have come out from the latest figures.
Well, as you mentioned, Gugu, it's been in production for the last 9 years, so there is reliability and credibility that is attached to the rankings. It's simple in its construct, but involves quite a bit of complexity in terms of the information that it garners. And I think just to have a quick run through what actually goes into that methodology, it's quite simple. It is a weighted average between macroeconomic variables, which, as we know, is a proxy for return. But then we have to weigh that up against the actual ease of doing business in each of these economies. But instead of just honing in on one specific factor, we take 4 internationally well-regarded surveys. We combine those and then we weight that against your macroeconomic environment. And therein lies the value of the actual ranking. We can then discern which are your most attractive investment destinations in Africa.
So which are they? And of course, what interesting trends have we seen come out from the report this year specifically?
Well, over the last 3 or 4 years, there's been quite interesting moves. And I think it's largely related to what we've seen in the global economy. But this year, our top 3 in order is Egypt, Morocco, and interestingly, South Africa is at number 3. And South Africa has progressively slipped in the rankings from that coveted number 1 spot over the last 2 to 3 years. And it's a combination. One would think it's simply because of the deterioration in the macroeconomic environment. But the surveys that we use to actually formulate our operating environment, we have seen a change in perception regarding the actual ease of doing business. And this has weighed on the overall attractiveness proposition. But I think we can't take away from the reforms that have been implemented in both Egypt and Morocco, far from where we were in 2011 in both those economies, given their substantial market sizes, but also, as I say, institutional reforms having been put into place and a lot of private sector backing of these types of initiatives.
I'm also keen to find out a little bit more about some other economies that might be mentioned in the top 10 and of course new themes and trends regarding sectoral investment as well.
Well, I think if we can just slip out of the top 10 for just one moment.
Sure.
One of the countries we'd like to highlight is in fact Djibouti. And Djibouti you would think is inconsequential from a geographic standpoint given its size, but it's a key trade outlet for both the north and the east of Africa and has increased more than 30 places in the World Bank Ease of Doing Business report. As a result, it has quite a higher standing in our operating environment index and as such has shifted more than 10 places in the overall rankings.
Interesting country that you mentioned certainly there, and I think there'll be a lot more insight as well into the attractiveness of that market. But when we take a look at this overall report, it certainly gives us more details regarding the economic performance of these markets and of course operational activity. But what other elements are incorporated into providing feedback for investors here?
Well, we also have to look at where investment is literally going. So we can tell you that these are your top 10 most attractive investment destinations, but is that really where we've seen the investment going in? So that's why we take foreign direct investment as an indicator to see if we are seeing that attraction in these markets. Now, from that perspective, yes, foreign direct investment has declined since 2015, but that is very correlated to your commodity prices that has seen a downturn since 2016. But luckily, we have seen a slight uptick. And in fact, in 2017, we have now seen that the projects within foreign direct investment has increased again. So we have seen that positive side to it. Now, if we relate foreign direct investment to the top 10 that Nima has just indicated, we do see that that is where investment is going. So the 2 largest economies that are, or the 2 economies receiving the most at the moment is Egypt and Ethiopia. And we have seen that both of those economies are in our top 10. In fact, Egypt being number 1. Then we've got other countries coming to the fore. Ghana, Nigeria, Morocco are also in the top 5 largest FDI recipients on the continent. And they're also in our top 10. So we do see that foreign direct investment is highly correlated to our investment attractiveness rankings. Now, you've highlighted sectors, and that is specifically what we are looking at in the latest Where to Invest in Africa document. Now, with sectors, where are we seeing foreign direct investment going? We focus on resources, retail, for instance, the manufacturing sector, ICT. But what we have been seeing from a foreign direct investment perspective is that it's not technically going into resources anymore. It's now moving into your more retail-orientated industries. And specifically in 2017, the industry that's receiving the most is manufacturing.
What's also quite interesting about this particular report is that for many international investors looking into the continent, 3 key markets always stand out for them: Nigeria, South Africa, and Kenya. And I'm sure over the years, many might have raised their eyebrows at the order of the rankings that have actually come through from the Where to Invest document. So how do you respond to some of this criticism and, of course, substantiate how it does relate to foreign direct investment, as you've touched on?
Well, of course, we are well aware as analysts that not all surveys, all methodologies, all data sets can encompass everything that an investor wants to look at. So I think that's one of the drawbacks of any type of methodology. You cannot add every indicator that you would like to. And then secondly, we've got a data set that is only annually updated. So when there are events in between the years that we publish this document, then of course that won't be reflected in our rankings. Of course, we will highlight that to our clients in other research documents. Another aspect is that we cannot always know exactly what all investors are looking at when you invest on the continent and in other countries. Some investors are risk averse, so they would look at how easy it is to do business in these environments. And then others are looking for growth, so they'll look at the economic side of doing business in Africa. So to that end, what we have done in the document is giving an adaptation of our original methodology. We put an extra weighting on the operating environment, and then in another methodology we give an extra weighting or larger weighting to the economic environment. And then we start seeing the country shift in the top 10. So for instance, if we put a larger weighting on your operating environment, we actually do see countries like Namibia, Botswana, Mauritius actually move into the top 10, because these are your less risky environments, very easy to do business there, and also of course their sovereign risk ratings are some of the highest on the continent. So indeed we are aware there are drawbacks, but of course our methodology is sound in looking at as many aspects as we can.
For the investors who will be reading through this report, watching through many of these videos and engaging with you on further information, does the outlook still remain positive though for the rest of the continent?
So there's always potential when we're looking at Africa. Long forgotten as the last frontier, it's now actively competitive with other emerging markets. And given the current global macroeconomic environment that we sit in, if we consider that average growth rates for some economies are in excess of 4 or even 5%, that is exceptionally competitive against a global average of around 3.5%. The integration into financial markets, the adaptation of digital economy into ICT sectors, these are all becoming or going towards the forefront of investment and diversifying away from that traditional view of what Africa can actually offer. So we can't just look at it in the short term, 1 or 2, 3 or 2 years. We have to look at the longer term opportunity and objective.
And I think if we do look at the longer term, I think one of the aspects that we all know is needed in the continent is industrialization. But for so many years, we have been seeing that the pace of this is extremely slow. I do believe that the African Continental Free Trade Agreement is key to unlocking that industrialization that we need on the continent. So yes, indeed, there have been failures with different agreements over the past few years, but this is the one that I think will find traction over the next few years because presidents have already signed it. So now they really have to implement it. And especially with South Africa being the head of the AU for next year again, or hosting the AU, we will see that South African government is also going to push its trade industry to be able to implement and adapt to the new free trade agreement. We've also seen recently how Nigeria signed it, but there's still a few hiccups that need to be overcome.